All right, everybody. Hello and welcome back to another podcast with Investing Education Academy. We're not going to talk about how long it's been since we've been live, but we're just going to say it's been a while. It's been a lot going on. Everybody knows everybody's dealing with everything. We have not been exempt from it. So we're just going to dive in. Now, it's good to see everybody again. If you have questions, please drop them. But just a quick update. So, Investing Education Academy has still been growing. Our online community has been fantastic. If you see the content being put out and you're in our group, you know we're still here. If you've been existentially watching us, it may look like we went away for a while, but we haven't. We just really have been putting most of our information into the platform. So for those of you all who are still thinking like, what is IEA? It's your first time maybe interacting with Leon or I. You can go to IEAnow.com. You can see it right at the bottom of our screen. You can also scan the QR code to kind of tell us a little bit about you and what you need to or want to know about the stock market. And we'll reach back out to you. We can see if membership makes sense. If you need help individually on your own, we can do that. We've been helping movie stars and athletes and real estate investors, people in other countries. We've been doing a lot. So, and then of course our community here. So with that being said, it's good to be back. We're going to just talk about stuff today. Leon, did I miss anything?
Nah, just like Brent said, they've been away for about, I want to say it's close to
We're not gonna talk.
Sorry. Yeah, so it's been a good time, as Brent said. We're doing a lot. But during this time, as Brent said, we've been extremely busy. The reason these lives haven't happened is because there's just been a lot, as Brent said, a lot going on. Well, and everything's good, like nothing wrong, nothing bad, nothing wrong. Everything's been great. But the main thing you all care about is the market, right? And so inside our community, we've been posting about kind of things that have been going on, through turmoil with the Trump stuff, the tariffs, the inflation. We've been kind of moving with our community through that. We haven't talked really publicly about it in a while, but what I'll just kind of go over right now. Trump's tariffs are inflationary. He'll say they're not, but the data is clearly shows that they are. We all feel it every day. Everything from intangibles like car insurance to tangibles like groceries are up anywhere from, low end is like 10 to 15%. Some things are up, over 30%. And companies are explicitly now saying these things are because of the tariffs. Now, the great thing though is the market has done awesome during this time, right? We're at all-time highs today. We reached all-time highs again today. And the reason, the multiple reasons for that, but the two main reasons. One, this AI thing, boom, bubble, whatever you want to call it, for those of us who were around back during the dot-com days. A lot of us are saying, oh, this feels similar to the dot-com days. And I agree. However, the difference is in the dot-com days, there was literally no revenue being generated. Like the big thing would be, quote unquote, eyeballs on your website. Like that was the metric, or the traffic to a website. That was a metric of success. Today, the biggest companies in the world are generating billions upon billions of dollars in revenue based on AI. Now, is it frothy? Absolutely, because you have a lot of these kind of these really young companies, or sort of meme-ish companies, are running like crazy. So there are frothy areas of the market, but the market in general is not frothy, because again, we're talking about real revenue, real profits being generated by some of the biggest companies in the world right now. Other thing is that, which is crazy, but it's been like this for a while. So the S&P 500, which is our benchmark, the the top, what they call the Magnificent 7 or 8, which is the top, Facebook, Amazon, all the big tech companies, they now make up 50% of the S&P 500's returns, I think, over the last like 12 to 18 months. So if you're looking at if you're looking at your portfolio and you're like, damn, why is the market at all-time highs, but my portfolio isn't, or like I'm underperforming? If you do not own those top 7 big massive tech companies, you're going to underperform, because again, they are almost literally dragging the market higher and providing all of the returns right now in the market.
Yeah, and also too, when we're talking about this AI, another big difference is the fact that they it is replacing some of the business overhead expenses that existed before. So, again, going back to what Leon said about the .com, there was a lot of hype, excitement, and really at that time, the market was a popularity contest. I mean, you had the runaway stocks like Qualcomm. I'll say they had the actual patent on technology, but then you had companies like AOL, where people were essentially just because they put out a whole lot of discs and people were signing on to the internet and the internet was new, they just thought, okay, it must be a great company to invest in. It wasn't really tracking metrics or profitability. And actually, during the .com era, some of the companies were losing money, but people just didn't care.
Yeah. Oh, like burning money on fire.
Yeah.
Like losing money. Yeah.
And it was the hope that, one day this is going to pop. This is going to explode. And then you had what was called the retail investors who were late to market. They were coming in with this idea that, okay, and retail investors are you and I. We were getting information late. We really didn't know what the technology was, and we didn't know where the technology might go. And we just became very hopeful that it would explode and win. And it was great advertising. It was great advertising because you can advertise just the market's wins, although you didn't know why it was winning. And so, when you look at AI, companies are using it, unfortunately, to replace some jobs that existed, but they are also using it to increase efficiencies. So the incorporation of AI isn't the same kind of bubble. It has a real effect on business and enterprise. However, not every company that deals with AI is a winner. So what I'm saying this part, this equivalent to like the .com era, is companies are coming out, IPOing, forming, going through SPACs, and they're doing it just because they have AI in their name. Like, I mean, some companies have literally changed their name just to include AI in their name. So just be careful when you're looking at the investments. Please don't take what we're saying and go, oh, okay, everything's great. No, we're not saying that. And it's a lot of small companies that are getting decimated from the cost of business. But it's these, what Leon said, the bigger 7 that are just pulling the market forward. So it's not just all roses and daisies and every company's winning because it looks like the market keeps getting pushed higher and higher. And sometimes if you don't know what's happening on the back end, you don't know that some of these smaller companies are just falling by the wayside.
Yeah. An example of that is a company called, if y'all not familiar, the company called Duolingo. The ticker symbol is DUL. Yeah, DULO. If you want to look it up. And some of you may know this, but they provide a way for people to learn foreign languages. And the thought is that AI, is going to be able to do that very easily. You just pull up your chatbot, ask it to teach you, put together a curriculum for you for a language, and it'll do it. Duolingo stock is down anywhere from 50 to like 80%. I say 40 to, let's say 40 to 60%. It could be more, but it's down huge. And Duolingo is not a recent IPO. This is a company that's been around. They're profitable. They're generating revenue. Problem is the market is kind of has this vibe that everything is okay right now for Duolingo, right? It's fine right now, but over time AI is going to be to take away their business. So as Brent said, not every company is a fact. Not every company is doing well. And as I said, those top tier mega cap tech companies are the ones that are really dragging the market higher. So like I said, there's a lot of froth. Some companies that as Brent said, have come public. Some have no revenues, no customers. Real quick, one example: company called Oklo, OKLO. They are a nuclear, what they call small modular reactor nuclear company. And all that means is they build nuclear reactors, but they're smaller than what we remember like from the 80s. They have no revenue. They have no revenue, of course, no profits. All they have right now is ideas and like kind of like drawings of what's going to come. Now the reason but if you look at their stock, the stock is up like, I don't know, 100%, 200%. Reason being is because they're getting, like, I think they signed a contract with Microsoft and some other big companies, because the problem is all these data centers that we keep hear about that are being built, they need power right now. And right now the power grid in the U.S. is woefully lacking for the amount of power these data centers are going to need. So a company like Oklo is kind of the other side of what we were saying. There are companies that actually have no revenue, have no profits, are kind of in the ramping up stage, but their stocks are through the roof. And why is that? Because they're signing deals with those Magnificent Seven, Magnificent Eight stocks that are pulling the market higher. So this is really like kind of like a stock pickers market right now.
Yeah. To Leon's point, even going back to the Duolingo, I just thought this was interesting. It is Duolingo, Grammarly, and for those of you all who don't know, Grammarly was a privately held company that issued.
Still is.
Well, I'm not sure if you know, but
okay, you about to tell me something.
They're doing their first round of raises
to
eventually go public. Yeah.
Oh, okay. Oh, so they're planning to. Okay, all right.
Yeah, but they've made a call for any investors want to come in on this first raise. I think the first raise is going to like sometime next year. But you do have these companies where you really have to understand what's happening with AI, because it's especially like a Duolingo, and I was surprised that Grammarly was doing a raise. I thought it was a stretch, like it was a desperation play personally. And when I saw it, I was like, they're trying to figure out how to, get revenue to increase their research and development, because they need to stay relevant. And also I was thinking maybe this is a play where they're just trying to grab some money before they just close the doors. Like, I'm not saying they will, and I'm not saying that's accurate. I'm just simply saying that's a thought. And so, I'm going to grab these real quick. So for those of you all who have played around with the Google glasses, like, these things are eliminating a lot of jobs, like the Meta glasses.
Oh yeah, the Ray-Bans. Yeah.
These things are. I mean, I have so many laying around here. I'm just giving them out to my clients as gifts. But it's when you talk about Duolingo, when recently took a trip to Panama, and of course, well, not of course, there was some language barriers. My wife speaks Spanish, but I don't. And so, in that space, you can actually put these on and just hit translate. It'll listen to the conversation and translate directly into your ear. And when you ask for a response, it can give you suggestions on responses. Like, this real-time interaction is going to eliminate the need for some of these other platforms. And it's happening at light speed. So, now you take all the AI, you take the energy needed. The big things are going to be infrastructure in the U.S. now. What is giving us infrastructure? Because, we also saw it's still a popularity contest out there, but it's even with it being a popularity contest, there's a stream of who are you connected to in the administration as it relates to the stock market. And those people who are believed to be close to the administration, everyone just assumes they're going to get favor. And because, of course, the checks and balances don't exist like they used to, it's just a matter of getting a check from your friends. On the flip side, it can also mean that you can lose your contract in a heartbeat, and there is no recourse. There is no, well, you need to follow through on this contract. Only thing you have in your arsenal is possibility to sue, and you're probably going to lose. And so, when you look at companies like the one Leon mentioned, you have to figure out, when Leon needs to talk about this more than really me, what kind of money are you investing right now? Is it, curious money? Is it discretionary money? Leon always says this: do not bet money you need to pay your groceries, your medical bills, because unless you really have studied the market and you're chasing the bunny, you can lose. Chasing that rabbit can cause you to lose if you don't understand what you're investing in. For those of you who have recently started investing and you're day trading, you're like, oh yeah, I've been killing it day trading, and you know what? You know how much I made? Most of the people Leon and I have encountered who day trade, especially those who are inexperienced, lose what they've made just as quickly, faster sometimes, and bigger. And so if you're trading on margin, if you're trading options, we give the same warnings. Just be careful in this market, unless you are a seasoned, decorated investor with a strategy and a discipline you can follow. Because the other thing is, when you get a couple bumps, you want to make your amount bigger and bigger, and then you play with these bigger risks, and all of a sudden that risk doesn't go your way, and the direction of the market changes, and you get hurt pretty bad. So just fair warning to those in that space.
There's a term that says that everyone's a genius in a bull market.
Yeah.
Right now we're in a bull. Yeah, right now we're in a bull market. I mean, I'd probably imagine everybody watching this is probably doing pretty well. If you're not beating the market, I would hope you're not down because the market is at all-time highs. But everyone's portfolio is generally probably doing pretty well. And as Brent said, some people are actually killing it in different markets, options, futures, what have you. Not even bear markets. Well, bear markets, which is when the market is down minimum of 20%, but even corrections, which is down anywhere from 10 to 20%, they happen and it will happen, right? So who knows? We don't know when, but at some point the market will correct. That never goes up forever, and we'll get some bumps in the road. So, and with a lot of these stocks right now that are these new IPOs, some of them are profits, some of them don't. You're like we're saying, you really got to watch out because some of these things move 3 and 4x the market. Right, so the market's up 3%. These things can be up 5, 6, 7%, and the same thing on the downside. The market's down 2%. These things can be down, the same amount. So you really got to be careful with a lot of the newer IPOs. I know some of these things are exciting, but like we always say, if you're going to do anything really speculative, try to keep it under 3% or maybe between 1 and 3%. If you're going to, but
1 to 3% of your total portfolio.
Yeah, sorry, yes, yep, good point. 1 to 3% of your total portfolio. But really, right now, I mean, like I said earlier, the market is being mainly driven by Microsoft, Amazon, Facebook, or Meta. I forget you, but you all know the I said things like Microsoft, the Magnificent Seven. Just Google that, you'll see them. If you do not have some of your portfolio in that, you probably should. That's what Brent and I do. Right? Not financial advice. But that's where a lot of the gains of this market are coming from. Now, of course, individual stocks, like I said, Oklo, the one I mentioned before, is up, I don't know, probably I think over 100%, has no profits or any revenue. But the reason it's up so much, again, I'll say it again, is because it's tied to those Magnificent Seven by offering them their data centers energy. So everything kind of, in the end, kind of folds back to those Magnificent Seven, Magnificent Eight. That's really driving the market higher. So, do your research. Look up the Mag 7 or Mag 8. I don't know what the term is now. And if you're going to look for anything speculative, I would say just, see, do they have any sort of agreements? Oh, I'll give one other example. Company called Nebius. Ticker symbol is NBIS. They're a small data center play. And so anybody who knows, there was a company a couple of years ago called Yandex, and they were basically the Google of Russia. Well, that company spun out their data center operations, and now they're a data center company. I think last week or 2 weeks ago. So here's the thing: the stock's market cap, which is the value of all of its stock times stock price, I think at the time was like 13 billion at the time. A week ago or two, Microsoft did a deal with them that's going to pay them $19 billion over 5-7 years, some pretty long-term contract. So what everyone was so shocked was like, wait a minute, the contract they got from Microsoft is larger than their market cap of the whole company, and the stock went parabolic. So look up NBIS, just another one. Look up again. Do your research. I'm just not a recommendation, just something to look up. But these are the kind of things that are happening in the market. And yes, these individual stocks can get huge returns too. But you also want to be in. I mean, first off, I'd say just look at just buying an index, and that's about 500 index. But also these individual stocks, the Mag 7, Mag 8, are places you want to look to, as well as these kind of these smaller plays.
Yeah, and I just looked it up. NBIS is Nebius Group. NV, and I'm guessing they're trading as an ADR, which is American Depository Receipt.
I want to say, I'm not sure. That's a good lookup. I want to say because so here's the thing: the data center that Microsoft essentially kind of like bought with the 19 billion. I mean, it didn't. Nebius is still running it, but they invested in them. Is in New Jersey. So
I'll check.
Yeah, that data center is in New Jersey, but they may not be. And what an ADR is, just an ADR is just a type of stock. When foreign companies list in the U.S., if they're not based here, they trade what's called an ADR, and it's just a foreign company trading in the U.S.
Yeah, you're talking about this stock in the last year, over the last 12 months, not year to date, but the last 12 months. I mean, wow, it's up 439%.
Yeah, in the last 12 months, Nebius is up 439%.
439%.
439%, right. Yeah.
And in the last 6 months, it's up 269%. In the last 1 month, it's up 53%.
Yep.
And in the last 5 days, it's up 17%.
So an example like this is why a lot of people are saying, oh, it's .com days. Oh, it's a. But again, remember, why did Nebius run like that? Because they got a $19 billion contract from Microsoft. I think like the second or third largest company on the planet with more money than almost the whole planet. So this could it be a bubble? Yeah, I mean anything's possible. But the bubble compared to the .com days when there was no revenue, no profits involved, that's not this. We have some of the largest companies in the world spending their billions and trillions in cash to build out this AI infrastructure. And, we'll see in another 2 to 3 years if it'll pay off. And of course, longer term. But I personally don't think it's a bubble because, like I said, I just think because there's real cash and real money being shuffled around here. But you see Nebius type of returns you can get from individual stocks. But do your research.
So everybody, that's it for us today. And our biggest statement takeaway is the market's still here, and the market is still a great way to build wealth. And if you are in a position where you're struggling with how to play the market, how to get in, how should you be in, what to get in when you're in, how to keep up with information, what's real information, what's fake information, join IA. We can do our best to bring you quality information and have those conversations inside of our group platform. If you are interested in learning more, you can go to ianow.com. That's IEAnow.com. If you're listening to this on our podcast while you're running or so forth, you can pull up this on YouTube and scan the QR code, or you can actually just go to ianow.com on your phone and check us out. So with that being said, we owe you all 2 stock picks, which we are still now putting in our platform. So that is where you will find that information. Leon, you have anything for us before we go?
Yeah, I just want to say we didn't even talk about crypto.
Yeah.
We didn't even talk about it. It's 2021 all over again now. It's like, that turned out to be a bubble, but just crypto is like the market is doing its thing. But we'll cover that at another podcast.
Everybody, thank you for being with us, and we will see you when we see you. All right, have a good one.